Ladies and gentlemen, good day and welcome to Manorama Industries Q1 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikash Verma from EY LLP. Thank you, and over to you, sir.
Thank you, Laiba. Good afternoon, everyone. On behalf of Manorama Industries Limited, I welcome you all to the company's maiden earnings conference call. To discuss the performance of the company and to answer the questions, we have with us the management team comprising of Mr. Ashish Saraf, President, Mr. Gautam Kumar Pal, Managing Director, Mr. Ashok Jain, CFO, Ms. Ekta Soni, AVP Investor Relations, and the Company Secretary team. Before we proceed with this call, I would like to draw your attention to the fact that today's discussion may contain forward-looking statements that are subject to various risks, uncertainties, and other factors which will be beyond management control. We kindly request that you bear in mind there may be uncertainties when interpreting such statements. Please note that this conference is being recorded. We will now start the session with opening remarks from the management team. Afterwards, we will open the floor for an interactive Q&A session. I will now hand over the conference over to Mr. Ashish Saraf for his opening remarks. Thank you, and over to you, sir.
Good afternoon, gentlemen, friends, and Manorama family members. I thank you and invite you to this conference. I heartily welcome everybody in our Manorama Industries maiden earnings call. Before I dwell deeper into the results and performance, I would like to spend a few minutes to explain the business model of Manorama Industries in brief for the benefit of all. Established in 2005, Manorama Industries is a unique global pioneer in manufacturing of cocoa butter equivalents, specialty fats and butters, and exotic products from plant-based tree-borne seeds like dal seeds, mango kernels, coca, mohra seeds, which are sourced from India, and one of our key shea nuts, which are sourced from West African countries of Ghana, Burkina, Togo, Benin, Nigeria. The company Manorama has carved a niche in manufacturing of this exotic sal-based cocoa butter equivalent, shea-based cocoa butter equivalent, stearins, mango, and other exotic fats and butters. Manorama company offers customized solutions to the particular and specialized needs for various food products, especially in the confectionery, chocolate, and cosmetic industry for all the Fortune 500 companies in the world. We are the leading exporter of the seeds from India, especially sal and mango, and additionally we enjoy the numero uno status for all these specialty fats in the world. We are the only company in the world which has all these exotic fats in one basket. We are a tailoring company which tailor and the needs of the specialty fats as per the requirements of each product all over the world. The key raw materials for Manorama's products like sal seeds available in India, mango seeds available in India, and shea nuts are available in West Africa. These seeds grow spontaneously in the deepest forests of their respective regions. Manorama has a multi-decade-old strong network of millions of tribals and forest dwellers for collection of these seeds across more than thousands of collection centers during the collection seasonal periods in India and West Africa. According to the government reports, India produces 15 lakh metric tons of sal seeds annually. Manorama procures around 80,000 to 1 lakh metric tons sal seeds accounting for less than 10% of the available supply. As the leading consumer of sulfides in India, Manorama faces no major risk in the raw materials, even though these raw materials are seasonal and vary from season to season, depending on various factors. Similarly, Africa produces around 17.60 lakh metric tons of raw shea nuts annually, as per reports of the government NG block market report. Manorama procures around 40,000 to 80,000 metric tons of shea nuts annually and does not foresee any major risk in the availability of this raw material. Whether it is sulfides or shea nuts or other seeds, the procurement volumes may vary year to year, but as per our sales and supply, we manage the scenario. Now we would like to, the manufacturing process of CBE, cocoa butter equivalent, and other exotic specialty fats and butters involve three major stages: solvent extraction, refining, fractionation, and intensification. Manorama operates a fully integrated state-of-the-art manufacturing facility in Birkoni near Raipur, which covers all these key processes from origin to the market, from start to finish. With an initial fractionation capacity of 15,000 metric tons in the year 2020-21, Manorama has successfully expanded its operations, reaching a current fractionation capacity of 40,000 metric tons. The latest expansion of 25,000 metric tons was commissioned in July 2024. To date, the company has invested around 212 crores in the capital expenditures, including a significant expansion of 25,000 metric tons capacity. Manorama's Milkoa Research and Development Center is accredited with Government of India's Department of Scientific Research DSIR certificate. In our in-house world-class research and development unit at Birkoni plant at Raipur, we continue to work on new products and applications, and most of these applications and products are working is done with our customers' needs required for their specific products. And these research all work goes on in continuous working with them, with our customers. The company is committed to continuously technologically upgrades and capacity expansions, supported by an advanced in-house quality control and research and development center led by our Dr. Krish Bhagan, who is a world-class scientist. And equally, we have a very highly capable team with a proven track record of decades of reliable, high-quality product supply to all our customers all around the world, which are mostly the top gods of chocolates and confectionery. And Manorama has a visionary management team. Manorama is well positioned to be a preferred sustainable supplier for international chocolate producers. Manorama is a visionary company which procures the wasted seeds from the floor of the forest, then uses scientific techniques and world-class technology to upgrade it to food-grade products which the children of all over the world consume. And we are proud to convert our wasted products into wealth. As per the industry's business size, the global CB and specialty fat butter market is likely to surpass $2,030 million by 2032, growing at a 6.1 CAGR. Research report cocoa butter sequence. Manorama enjoys decades-old strong customer relationships with the global chocolate and confectionery manufacturers. To name a few, Ferrero, Mondelez, Nestle, Hershey, Mars, Body Shop, Barry Callebaut, and all the who's who of the chocolate and confectionery world. Most of them are Manorama's customers in the global and the market and also in the Indian market. Manorama has been accredited with more than 100 national international awards by governments and non-government entities. Furthermore, Manorama has achieved numerous esteemed national and international certifications in areas such as research and innovation, quality control, standard processes, sustainable procurement, and ESG practices. These applauds and recognitions reflect Manorama's commitment to an environment-friendly, employment-generating, sustainable, growth-oriented business model with global recognition and presence since many decades. As we look to the future of our company, is committed to driving innovation and excellence in the chocolate, confectionery, and cosmetic industry. We are focused on expanding our product range with premium, ethically sourced ingredients, while also enhancing our production capabilities to meet growing global demand. Our products are scientifically produced, which requires very high technology and continuous monitoring and research-based production. Our strategic investments in sustainable practices and advanced technology will enable us to deliver high-quality products more efficiently and responsibly. With a strong emphasis on customer satisfaction and market expansion, we are poised to capture new opportunities and set new standards in the manufacturing sector. With the expansion of the fractionation capacity to 40,000 per tons, we anticipate a significant surge in our revenues. Thus, we are upgrading our guidance to INR 750 crores plus for the fiscal year 2025, along with an increase in profitability due to the economies of scale, margin improvements, and multiple other efficiencies which we are achieving. We are excited to continue our journey towards sustainable growth, creating world-class products which are coming from most certified ethically sourced crops for our customers worldwide. I would now like to invite our CFO, Mr. Ashok Jain, for his comments.
Good afternoon, everyone, and a warm welcome to Manorama Industries Q1 FY24-25 earnings conference call. Financial performance for Q1 FY24-25. Revenue growth. Manorama Industries achieved a notable 19.6 year-on-year increase its revenue, reaching INR 133 crore rupees. This growth is attributable to robust demand across the company's product portfolio in the both domestic and international markets. Revenue breakdown. Export sales contributed INR 97 crore rupees, making up 73% of total revenue. This indicates strong international market performance. Domestic sales for the remaining revenue shared. EBITDA performance. EBITDA increased. The company's EBITDA surged by 43.6% year-on-year to INR 26.8 crore rupees. EBITDA margin expanded by 335 basis points and year-on-year it is 20.1%. This margin improvement reflects effective cost management, strategies and operational efficiencies. PAT, profit after tax. PAT growth increased by 17.2% year-on-year. That is INR 13.54 crore rupees. PAT margin stood 10.2%, reflecting a solid profit performance in relation to revenue. Long-term performance for FY22-24. Revenue CAGR achieved a compound annual growth rate of 25%. EBITDA CAGR registered a CAGR of 14%. PAT CAGR of 15%. Thank you for your attention to our financial performance. We now open the floor for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, you'll wait for a moment while the question queue assembles. The first question is from the line of Nitin Gosar from Bank of India Mutual Fund. Please go ahead.
Hi team, congrats on good set of numbers. Couple of questions. Just trying to understand how to look at the new capacity which has got commissioned. So how should one see the sales volumes in terms of fractionation for the quarter that has gone by? So June quarter which we ended with, what was the actual sales if I were to monitor it from fractionation capacity point of view? And second linked question is, going forward for FY25, when we'll have 40,000 tons fractionation capacity, what should we see or how should we see it scaling up and end up for FY25? And hopefully if you can also answer for FY26, how should we see the utilization level on fractionation capacity basis?
So the capacity for the current quarter of CB was 750 metric tons and 1150 metric tons for the stearin. The new capacity which was commissioned on 1st of July has not contributed in this quarter's results. And we expect in the current going forward season, the CB should be around 5,000 metric. 60.
So current capacity utilization for SF2 fractionation, it will be 60 to 70% in the coming quarters.
And sir, for the existing plant, we have a utilization of around 100% for our existing capacity, and we expect our capacity utilization to be around in the range of 50 to 70% in the financial year FY25, and we expect it to increase it to 80 to 85% in the financial year FY26.
Got it. So just to put it in context, 15,000 ton was the fractionation sales or utilization for the quarter which has gone by, and thereafterwards on total 40,000 we are expecting utilization to be around 60 to 70% for the year, or only for the new capacity we are expecting 60 to 70%?
For the new capacity, we expect our utilization to be around 60 to 70%, and for existing capacity, we expect 100%.
Continue at 100.
Yes.
Got it. And similarly, if I think Ashish did allude to the value-added products versus the other products. So wanted to understand the share of breakup between value-added and non-value-added that we have today. How is that going to change once the new capacity gets commissioned? So let's say between FY25 and 26, how should one think through that CB share or value-added share to shape up?
So for as of now, if you see, for example, all our products are very niche products because they are all value-added products. But what we categorize, if you want to hear of, like for example, cocoa butter equivalent is a value-added product for the company. For example, the stearin part which we receive from fractionation is a value-added product for the company. So around 50 to 60%, whatever the current company currently produces, is the value-added product. So of course, we have actually increased our wallet share for our value-added products. Currently, it is 50 to 60%, combining both CBE and steering. So we aim to increase our wallet share of CBE to 20 to 30% for the current financial year, and we expect to increase it further in the coming financial year, FY26. So maybe current year it would be 30%, and going forward we may increase to 50% the wallet share of cocoa butter equivalent.
Got it. And remaining would be the stearin portion. So right now, when we say value-added share is 50 to 60%, we include CB and stearin.
Yeah, we include
forward. CB alone could be 50.
No, combining both, and going forward alone would be stearin. Basically, the CBE is made out of stearin only.
Right.
For example, if we intend to increase the volume of our cocoa butter equivalent, so the stearin component selling will be less from that. So combining the value-added product will be around 70%, combining both CBE and stearin.
Got it. Perfect. And if time permitting, I have two more questions, if I can continue.
Yes, please.
Yeah. The third question is with regard to the realization. If one were to understand from, I completely understand, there are competitive reasons for which there is limitation to share the pricing. But, on broad basis, if can help us understand what kind of realization we see for a value-added product versus non or limited value-added product. And how should one see this shaping up? Because there are certain contracts which are, priced at earlier value, and the realizations could be or would have shaped up on the higher side. So if I were to, take a starting point as a April or let's say start of this year versus last year, how should one believe or how should one read the value-added piece realization, how they have shaped up? And ongoing basis or looking forward basis, does it seem to be on the improving trend, or are the current numbers factoring in the improved version of those realization already?
So sir, yes. So if we talk on the realization part first, so we take that question first. So on the realization part, CBE, for example, what we used to, so the average price for our cocoa butter
has gone up.
So if the price for, of course, you have seen all the global situations regarding the products of cocoa butter equivalent, the rising surge in demand. So of course, we are booking it at capacity at a much good rate compared to what we have booked in the last year. So on average, we can take on a jump of around 10 to 15%. On the pricing start, we have initiated our booking accordingly, and we are taking our contracts as per the revised price for our new products. And all these things, of course, that are going to attribute to our margins, because there is not just the price realization benefit that company is going to get in the coming quarters, in the coming years, but there are several other factors which will attribute to the margin. For example, the economies of scale, the operating leverage, what we are going to get out of this capacity once we have started utilizing our capacity at the optimum level. We are going to get the benefit of operating leverage, economies of scale, and whatever backward integration we have done, and we have made all the process integrated at one plant under the premises, so that seamless operation will also attribute to the margin. Besides that, we expect better customer mix also, and going forward, we expect better product mix also for our portfolio. So we expect our margins to be sustainable. As you have seen, we have reported 20% EBITDA margin this quarter, attributed to our significant cost-efficient management system and the efficiency. So the company will try to maintain this margin in the range of 20 to 22% in the coming financial year. and it could, of course, can surpass more, but the company will be in a better position, to guide it further beyond 20 to 20% as the quarter four passes by.
Got it. I think that also helped me to cover up the next question which I had lined up. Again, just trying to conclude on this. So margins, what we reflected for...
Sorry to interrupt, sir. Maybe request you that you return to the question queue for follow-up questions.
Yeah, I'm just cross-verifying, and I'll go back to the queue. Just a minute more. So the quarter which we saw, which had gone by, we had reported 20% margin. It didn't see a material benefit coming out of new facility. And going forward, as new facility contributes, value-added products improve, and obviously certain degree of realization changes, the margins are trending upwards, and it should get reflected partly in this year and hopefully full benefit in the coming year, that is FY26. Is that the conclusion I should take?
Yes, sir, correctly put it.
Oh, okay. Thank you.
Thank you very much. The next question is from the line of Jeevan Patwa from Sahastra Capital. Please go ahead.
Yeah, congratulations for a good set of numbers. My question is, we have expanded our capacities from 15,000 tons to 40,000 tons. So how do you see the global demand? So do you think the market is good enough to absorb this additional capacity?
Thank you, sir, for the question. So yes, the global exotic butter and fat industry is more than 2 million tons, and it is growing at 7% per annum. Secondly, in the last few years, there has been no new capacity, less capacity which has been added globally. Additionally, there are newer and newer applications are getting developed, which increases the demand for our specialty exotic fat and cocoa butter equivalents. Speaking specifically about the Manorama, in FY25, we were supplying to very few major clients, and the export was not that great as it is now currently. Today, we have more than 80 global clients. We also have inroads we have expanded our business to US, Europe, Russia, Middle East, Turkey, and various other countries. So this is the market where you need to have specific applications for specific clients. And also, it takes 2 to 3 years for any new player to onboard a new client. In last 3 years, we have worked with multiple clients and able to develop specific products for their application.
Okay, great. And secondly, how do you see yourself competitively positioned in the global scenario? So in terms of competition, how do you see yourself positioned in the global scenario?
So firstly, as you know that Manorama is the leading company which can process any of these specialty fats and butters coming off the seeds like sal, chia, and the mango kernel. All against the majority players who are there, but they are based out of more on the chia nut part. Secondly, we are one of the very few companies who supply to global confectionery giants like Mondelez, Ferrero, Mars, Nestle, Hershey, and also cosmetic giants like L'Oreal, Body Shop, Lush. And also there are applications to the bakery industry and the HoReCa market. So whatever byproducts get produced in all sold in the market. So we have a plant where nothing is wasted, and that which gives a competitive cost advantage against the global players.
Perfect, sir. Thanks a lot. I'll join with you again. Thanks a lot.
Thank you.
Thank you very much. The next question is from the line of Kaushik Mohan from Ashika. Please go ahead.
Hi, sir. My question is, sir, that I can see that we have done increase our capacities, right? What kind of amount that we invested for this capacity, and what kind of peak revenues that we can see?
So, sir, for the new capacity, we have spent more than 100 crores on this new capacity expansion, which includes the extraction plant of 90,000 tons, the refinery plant of 30,000 metric tons per annum, the interesterification plant of 15,000 metric tons per annum, and the fractionation plant of 25,000 metric tons per annum, along with the other supporting infrastructure and needs. At peak utilization, the new expansion should generate a revenue which is close to 600 to 800 crores on an asset turnover ratio of ranges between 6 to 8. At today's pricing, we expect we should reach our optimum utilization of the new capacity by the end of FY27.
Got it. Ma'am, you have told the guidance for this year to being around 750 crores. Also, you mentioned with one of your colleagues that you are going to run a present old factory at a 100% utilization and the new one at a 70% utilization. If I assume the old one being at 100% utilization, it means we'll do the same revenue as last year, whatever we closed at. And also with the new facility, that means that 25,000 is the new facility. In this 70% is coming out to be around 17,500. Also in the call you mentioned that per kg realizations is somewhere around approximately it is a better size. I don't know the number. If you can specifically mention that. That means that 17,500 plus 15,000, the total is coming out to be 32,500. Is my understanding right? This will be the capacity that in this year?
So of course you are right, but there is a short calculation that we have commissioned our new plant on the 1st July. So we have to exclude the first quarter out of it, and you have to exclude the first 3 months out of your calculation, and the rest of the calculation are correct as per the terms.
Got it. And what will be the per kg selling price if it is possible to be shared?
Looking at the competitiveness for the market, we will restrict ourselves to share the price.
Okay. Ma'am, and I also understand that cocoa prices are increasing in the market, and normally cocoa equivalent butter trades at 50% lower than what it's basic understanding that what I have. So if I wanted to understand now the cocoa prices are skyrocketed, right? Are we also going for a price hike in our product?
Increase of cocoa butter definitely increases the price, but our basic model is whether whatever the price of cocoa butter is there, the CB has its own value chain and its own requirement all over the world, and CB is a co-developed product which we do, and the reasons of the profit are not only due to the increase of cocoa butter prices. Cocoa butter prices may go up, may come down. CB has all the chocolates in the world which needs, mass producers need CB to produce the chocolates and give a better shelf life and better efficiency in the mouthfeel of the chocolate, and plus the cost efficiency which we have bought in due to the new expansion, the product shelf lives have increased, the better textures CB has. So there are a lot of reasons CB demand is increasing and will keep on being utilized all over the world by the companies who produce chocolates and confections.
Got it. Sir, my other question is that in the current quarter, I can see our interest cost being around 8.5 crore. If I assume this will be the same for the next 4 quarters, that means our interest cost has gone pretty high. Can I understand this is the entire money has been used for the investment of our capex?
So all this money is applied for the working capital for procurement of our raw materials, and the same will be around the average cost of borrowing is 9%.
Got it. And sir, also I can see the inventory levels going up and the inventory change in inventory. So
it will be continuing for these 3 quarters, sir. Coming 3 quarters. And we are debt free, means as we are also surplus fund of our cash FDR. So technically, we have around the 250 crore rupees is only working capital for the procurement of raw material, net debt.
Okay. Sir, how can you explain about our contract?
We have surplus FDR in our books around 95 crore rupees as on date. That will be also utilized for the coming working capital requirement.
Got it. Sir, also can you explain me on our contracts that we have it with our clients? Is it a very long term, and how long is the contract that we work with them, and if there is any price change, when do we take that price change into consideration?
So we are working with our clients. We are more than 80 global clients, and otherwise we have more than 150 clients, customers. So everybody has their own way of buying. Some buys on short-term basis, but some buys on long-term basis. So our contracts range from 1 year to 6 months to 3 months delivery periods.
Another question. We have incorporated subsidiaries, right? Australia, Russia, as well as in the Middle East. Can you explain the purpose of this?
So basically, we have this for different purposes. The subsidiaries in West Africa, African subsidiaries are for procurement of shea nuts from the tribals and villagers of those regions, like we do in India. Whereas the subsidiary in Russia is for selling to the local small companies which are based in Russia, where we need to be present to cater to the smaller companies. As you must understand, chocolate business all over the world has many types of companies. The top ones are the Ferrero, the Mondelez, the Nestle, Barry Callebaut, Mars. And then there are second rung, third rung. So there are different categories and layers of these chocolate companies. So for catering to the third and fourth layer of the companies, we have established in Russia, Dubai, and there are also multiple other business reasons where we can utilize these companies for the Dubai companies, especially for procurement also. So considering the importance of the local presence, because ours is a global market and we need to cater and having more synergies of scale and having more to be more near the customer and to cater to our profitability, these decisions have been taken.
So what is our capex plan for next 2 years? Do we have any, or will become a cash-rich company because cash flows will be positive?
The clear intention of Manorama is to be 100% debt-free. We already have 95 crores of fixed deposits in the bank also. And our plan is to be debt-free in next 3 to 4 years. And we prioritize optimum utilization of our capacity for financial year 26-27, where we see much higher revenue growth and much higher margin increases due to the various advantages we will get because of this new addition of the capacity. And there are a couple of projects in pipeline which company is preparing the plan and working on the feasibility and details. And once we are ready, we will come to our board for approval of the same. And we have last 5 years, since the time our production started in April 2020, when the corona hit India. And since then till today, we have been able to face all the hurdles and reach here. And now once we are here, we see a very bright future going forward. A very, very bright future.
Got it. Sir, and in the long term,
Sorry to interrupt
margin.
you. We request you that you return to the question queue for follow-up questions, as there are several participants waiting for their turn.
Sure.
Okay, sir. Thank you so much. Next question is from the line of Deep Chitalia from 9 Rays Equi Research. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes, sir, you are audible.
Yes, ma'am. So I just wanted to ask that the raw materials of shea and sal which we procure from tribal people in Africa, so they don't have the bank account. So just wanted to know that what is the mode of payment and what is the terms and conditions you sign with the tribals? Is it on a spot prices basis or is it on a fixed prices?
So Manorama Industries, we 100% follow the rules of the law and the land. And we are pioneers in the business of procurement. We have received multiple. We basically ensure that the money reaches the woman. Billions of women in India and Africa are our customers. So we all have audit teams traveling all around the regions to monitor our own people. Generally, the head of the village, whomsoever is the head, like in India we have the Panchayat chief or the village chief. Same system they have in West Africa also. So generally they are the heads whom we use and we pay them and they pay the woman. So we don't buy anything in cash. All the purchases are done through banking channels, whether it is India or Africa.
Okay. And sir, if the contract is on spot prices or is it a fixed contract on a yearly basis or a quarterly basis?
On CR nuts and all, you have to understand, this is procured by millions of tribal women. And when we use the word tribal and forest dwellers, they are natural forest people of India and West Africa. And there cannot be any contract. All the bots what we buy from them are on the prices of that day. India, we have fixed prices for sal and mango, as we are the only buyer, most of the buyers. We are the key buyers. And in West Africa also it is mostly bought on spot basis.
Okay, sir. Understood. Thank you so much.
Thank you very much. The next question is from the line of Sanjay Manyal from DAM Capital. Please go ahead.
Hi, sir. Just want to understand if you can throw some light on the cocoa economics in Africa, the way prices have moved up in cocoa. How sustainable these prices are? How is the production sort of going to come in next few years in Africa? And whether if suppose cocoa prices comes down, then whether it can impact the cocoa butter price also.
Thank you. As I explained earlier, cocoa butter, all the 7-8 billion the people on earth want to eat cocoa butter. They love cocoa. So cocoa is in high demand all over the world. It is the best. It is the most popular in Europe and all over America and all. Countries like India, China, Brazil, the demand growth of cocoa and the demand growth of chocolate has gone up still more further. So basically, cocoa is produced. The demand is going very fast, and the production is cocoa is subject to a very particular area, like it is grown in West Africa, where 60% of the cocoa of the world is grown. Some is in Latin America and some is in Indonesia, Malaysia. India has a very, very small proportion. So the cocoa is a very complicated process. The growing, the planting, then the tree needs special care. And the farmers are very tired of handling the cocoa. The high prices of cocoa don't reach the farmers. It goes to various other channels in between. So basically the demand supply of cocoa will happen, it will go up, it will come down. That is a process. What I'm trying to say is, as far as our business is concerned, it doesn't affect directly. Of course, there are indirect effects on the prices. But every price, like of CB and all, since last so many years we are doing, and cocoa has been going up and down, but our business is stable.
Right, sir. So also, if you can just give a volume number for the current quarter, segregated between the Olein and cocoa butter equivalent, what proportion of cocoa butter equivalent volume is of your total volumes, and also if you can give the segregation of Olein and stearin.
We will share with you with details, sir, separately.
Okay. That's all from my side, sir. Thank you.
Thank you.
Thank you very much. The next question is from the line of Bhuvan from Tiger Assets. Please go ahead. Mr. Bhuvan, your line is unmuted.
Am I audible?
Hello? No. Hello? So there's some static disturbance from your line.
Hello. Am I audible now?
Yes, you're audible.
Yes. Thank you for the opportunity and congrats on the good set of numbers. I would like to know what percentage of the CBE is presently used in chocolates, and how much time could it take to reach to 5% of the FSSAI rate?
7% in chocolate.
Basically, CBE can generally chocolate makers mix 30%. This is a general way. Every chocolate has its own permutation combinations, and the chocolate companies are having their secret recipes. They don't share with us. But as a thumb rule, generally chocolate contains 30% cocoa butter by weight. Should contain some, but it all depends on the cost and the company which is producing it. So as per the FSI regulation in India and the European regulation was 5% allowed by weight in use of CBE. If the wrapper of the chocolate says 5% chocolate, like 5-star, they don't put chocolate word on it. They use the word sugar boiled confectionery. So there this rule of 5%. If they want to put CBE, there this rule of 5% doesn't apply. But if you put your chocolate word, then this rule of 5% applies. But the demand is so high of the CBE, so whether it is 5% or 15% doesn't matter. It has its own demand and supply issue.
Okay, thank you. And another question, what led to the margin expansion? Is it operating leverage or rise in operations or what? Hello? Hello?
So, the EBITDA margin, if you see for the whole year, it stands around 17%. In the first quarter of FY25, we have reported an EBITDA margin of 20%. So with the help of the growth measure taken by the company, of course, the margins are going to be on the improving trajectory in the next 2 years, in the coming years. And there are several factors which are going to the margin improvement. Like, for example, there is improving share of the value-added products, the better customer mix, to the economics of scale in sourcing, the backward integration, what we have done, and the seamless operation. Also, the company is going to get the operating leverage benefit out of it because the fixed overheads will not change in the line of the revenue increases. And also, there will be certain products where the realization will improve, and we are looking our margins to be gravitated towards 22% in the FY25. However, the full benefits of the points, of course, we talked about will get reflected in FY26. So this margin trajectory will keep moving upwards, which we wish to update as the quarter ends in the coming quarter. So as of now, the guidance what we want to throw it for the FY21 is it should be in the range between 20 to 22%.
Okay. And is your shipments from Africa affected by the Red Sea crisis? And how are you seeing the shipping trending over?
So as far as African imports are concerned, they are not directly impacted by the Red Sea crisis. The general impact of Red Sea crisis is on the areas where we ship around that. So the freight, the container freights have gone up almost doubled because of those crises to certain markets where we ship. But of course, all those increases have been taken care in the value, in the pricing of our products.
Okay, so any increase in prices will be passed on to the customer. It won't be incurred. Yeah.
We cannot say for all the customers, yes, but most of it.
Okay, thank you and all the best.
Thank you.
Thank you very much. The next question is from the line of Alisha Mahola from Envision Capital. Please go ahead.
Hi, sir. Good afternoon. Thank you for the opportunity. 3 questions. First, what
आवाज नहीं आ रहा है?
Sir, अभी आ रहा है? Am I audible?
A little louder, madam.
Okay. I hope I'm audible, sir.
Yeah.
Yes. First question था कि what is the volume growth on YOY basis that we have achieved, or is it all realization growth?
Volume 50% growth. So whatever growth we have reported in the last financial year or in the coming quarter, that attributes to the volume only, the utilization of our plant. And will come in the coming quarters.
No, I understand that, but we may have...
We cannot hear you properly.
Ma'am, can you
Hello,
please
am I
use
audible
your
now?
handset
Hello?
while you ask your question?
Am I audible now?
Yeah, you're audible.
Yes. I just wanted to understand that we may be operating at full utilization at some part of last year also. So I'm just saying Q1 25 to Q1 24, is the growth that we're seeing of almost 20% all volume growth, or have we got some benefit of realization growth also?
So if you see the last year we did our utilization was around 90% in the last year. In the last financial year which we reported currently, the utilization was somewhere around 95 to 100% for the plant. So of course the most of the growth, if you see, it is coming from the volume growth. Of course there are certain products where the realization benefits also come, but the larger portion is coming from the volume growth because of the optimum utilization from the last year to current year.
Understood. And peak utilization for us would be 100% or would it be 90 or 95%?
So there are several process, because there are one process, of course, because there are multiple processes from where we get this product CBE and stearin. So there will be capacity utilization can differ or vary for different processes, and it is like up and down, but yes, optimum can be taken more than 90% for the plant.
Okay. And just the last question was this new capacity that has come on stream, the 25,000. While you all did mention that, we have 80 plus global customers and we've also expanded to new markets. Is this capacity tied up where we have some soft commitment from customers that they are going to increase their offtake or volume with us?
I cannot hear.
Hello?
So this is an ongoing process where because as you have to understand, the Manorama is a very unique company which is buying the raw materials which is taking the raw, ensuring from millions of forest dwellers from the floor of the forest, then bringing to our factories where we produce highly scientific products which are used in all over the world. The children of the world, the people of the world eat it. So this is not a commodity, this is a very high niche specialty, and these specialties have their own value additions and their own value products are nobody else in the world can do all these jobs. I cannot say nobody, but I can say it is not difficult. It is not easy, it is quite difficult. There are multiple entry barriers for new customers, whether it is the procurement side, whether it is the highly scientific production side, whether it is the customers because all the customers of the world, their products are billion-dollar branded products. They don't want to buy these products from others. So we have our own way where we have our own product demands.
I understand that. It's just that because, like you said, there are newer applications and because it's a very niche product, we're still saying that we'll reach peak utilization of the new plant in 27, whereas we're already expecting 60-65% utilization in the new plant for the rest of the year. So can we expect that maybe the new plant can reach peak utilization of 90% plus in 26 only?
So of course, we of course can reach that. The company has that potential, to reach the utilization optimum by FY26 also. But at this point of time, because we have just commissioned the plant, it will be too early, to comment it. So on a safer side, we have committed to the FY26. But of course, as the quarter progresses, we are going to update you further. But of course, the company has that potential to reach the utilization in FY26 also.
Okay, great. Thank you and all the best.
Thank you.
Thank you very much. The next question is from the line of Jainam Doshi from Chris Portfolio. Please go ahead.
Yeah, so congratulations on good set of numbers. I just wanted to ask, could you throw some light on the newer products that our R&D team is working on, like some different applications except the confectionery and the cosmetics?
So we have launched certain products, if you can say that too in the name of like Milko Cream, there are products called Milko Spray, Milko A and Milko E, which the company has recently launched, which the application are going to be used in, for example, the bakery fat markets, the Horeca markets, and going forward in the edible industries as well. So these are some of the products which we have launched currently, and there are further products which are currently in the pipeline when the company reaches the position when we have launched, and then we are going to come up with the official announcement.
Sure. Thanks a lot. That's all from my side. Yeah.
Thank you.
Thank you very much. The next question is from the line of Arun Gupta from SE Securities. Please go ahead.
Hello, Ashish. This is Sajal Gupta speaking, and good afternoon to you and the team, and congratulations for taking off on the new line of capacity. So most of the questions have been answered. So just I wanted to understand what is the moat in this company? Is it possible for anyone to come and start off a business like this, or not?
Thanks, Sajal. I will use the word here. It is very difficult. It is not impossible, but it is not possible also. So there are three major sides to it. One is a procurement side. So these networks which we talk very proudly about have been developed over last 20-30 years of very hard work. So it is not a product which you can go to a mandi and buy. You have to go to the forest villages and establish that network and get the right quality of seeds which we can process. Second, the key part is the production facilities. These facilities and all which we enjoy today, there has been a lot of blood and sweat which has gone into making these technical and these special scientific ways of processing. And these are very highly unique and very difficult for new players to make and sustain. And the third biggest side is the customer base, because all this chocolate is a very, very delicate product. It is a very unique product which no buyer wants to experiment with new players. The minimum entry barrier, first you need to send samples, then they approve the samples, then they take 8 months to 1 year of shelf life test, because all these food products have shelf life, so how the new players' quality will behave. Then they try the main pilot plant production trials. So the process of entering itself is 3 to 4 years. And then the question comes to whenever new player approaches, they will ask, what is your experience? Where is your factory? First you put up a factory, show us your procurement network, then we will think of considering whether we want to buy it or not. And then there are multiple audits, because we have to understand these products are being eaten by the people not only of India but all over the world. Whether it is Japan, whether it is Europe, whether it is Russia, whether it is Latin America, or the other parts of the world, Dubai, the Middle East. So this is a very, very critical product, which is very difficult I will not say it is impossible, but it is quite difficult. And this is creation of wealth from waste. And in this process, millions of tribal peoples are getting millions of dollars in their pocket by us, by Manorama.
Okay. It sounds good. There's such a huge moat for the company for anyone to enter into this line of business. So just another thing that, as we have seen, the cocoa prices have almost doubled. So I presume the CBE also has moved in tandem with the prices of cocoa. So aren't we giving a very conservative guidance on the margin side? Because if I see that your wallet CBE share, which is 30% plus stated, it will be 70% in the current year. Could you first tell me what was the shares last year? And because we are moving on hierarchy on the value-added item, the margin should really move much higher than what is being guided by the management.
I agree to what you are saying, Fazalji, but we are with every quarter we will be able to guide you better and better, because these are all at blended levels we have guided, and now our new facility has started production, and going forward we see the great future in this business. So we can definitely do better, but it is our also as a conservative approach.
And sir, we of course are going to guide you as the quarter progresses, because the company currently, of course, you have seen we reported the margin of 20%. So we will try to stay in the increased trajectory mode, but we can update you once the quarter progresses.
Because as I see the company going forward, correct me if I'm wrong, that there are very few companies which have got an asset turnover ratio of above 6. So, and as you are guiding, by next year you'll be almost fully utilized on your capacity, existing capacity, plus your new capacity which is coming in play right now. You would need further capacity additions going forward. So that would be a very, very positive thing for the company. In 2 years you can utilize the full capacity. I hope I'm on the right track on this part.
Of course, sir, you are right, because there are a lot of potential is already there in the existing business. You see the demand, you see the supply, you see the technology. So of course, there are a lot of potential the company has to expand the capacity. And there are plans in the company. The team currently is working on the couple of projects. We are checking the feasibility of the projects and everything. So we will come up definitely with the official announcement once our board approves the projects. And of course, there are plans which are very positive, and it is for the growth for the company, and that are there the company is currently discussing.
Thank you. That is all from my side, and wish you all the good luck for the coming future.
Thank you, sir.
Thank you, sir.
Thanks.
Thank you very much. The next question is from the line of Mayur Parkeria from Wealth Managers India Private Limited. Please go ahead.
Hello. Am I audible?
Hello. Yes, sir, you are audible.
Am I audible?
Yes, sir, you are audible.
Yeah. Okay. So congratulations on good set of number, and great to know that you started with maiden con call process, and hope it continues. So I had two questions basically. One a little operational and a second little long term. One is, will it be possible for you to give us an understanding of how did FY24 revenues, if you have to break between chocolates, confectionaries, and cosmetics? That is one. And how do you see with the new capacity, how does this mix change? So that is first. And second is to management over the longer term. What is our 5 year, in terms of 5 to 6 years of vision, in terms of have we got any long term range plan in terms of whether it is capacity, whether it is revenues, whether it is ROCs or anything, in terms of little longish, how do we see 5 years? Now we have come across this, we have broken the new capacities are placed, the success is there, and how do we see the little long term in terms of is there a tangible vision there, or any qualitative vision which you see over the next 5 to 6 years, so that how do we monitor the company over this longish period?
The biggest vision we foresee is we see the unique Manorama in every country of the world, supplying to all the confectionery and chocolate companies, not only whether it is Colombia or whether it is America or whether it is any country in the world. So we see a very big bright future going forward, and we have very high vision and plannings in store. Currently, our target is to first optimize the second fractionation plant to its full utilization, but we are not waiting. Our other teams are simultaneously working on all the other projects and other further expansions and further deep dive. We can go into the various parts of the world. That is why lots of our subsidiaries now we have started opening all over the world. And we see a big future, whether it is Russia, whether it is America, whether it is all parts of the world. And even in India, we see a huge opportunity for our byproducts value realization. We being a 1.4 billion country, and the consumption of the food products going up and up and up. So we have a big vision for Manorama going forward, and we see a very, very bright future.
Sir, any numbers which we can track and benchmark against over the longish period in terms of either capacity or revenues or any such things?
That we will share going forward once we increase. There are many things in the offering and there are multiple projects and workings we are working on. And as and when we will inform to our board and again come back to you.
Great, sir. Thank you so much. And sir, and the first question, will it be, is it possible to understand the revenue mix in the last year and how will it play out in the with the new capacity?
So 90% is the food business and 8 to 7% is the cosmetics business.
Okay, and that is how it will always also remain as we go ahead?
Not necessarily, because we are majorly expanding in the confectionery and chocolate business. So definitely it will not remain the cosmetic business. Again, we are focusing also simultaneously. But the volume in the food business is extremely high compared to the natural cosmetics of the world.
Sir, this breakup you gave from revenue rupees crores or from the volume perspective?
Breakup is based on volume, sir.
Okay. And how will it be in the revenue side?
Revenue will be same, around 90%, 92% is the chocolate confectionery. And depending on the further markets.
Revenue in the food will definitely increase because cosmetics growth is steady. Food growth is quite high.
Okay, sir. Thank you so much and wish you all the best.
Thank you very much. The next question is from the line of Jagat Yagnik from Prince Enterprise. Please go ahead.
Hello, sir. Congratulations for commissioning this plant, and now the company has become a fully integrated organization to provide end-to-end solutions.
Thank you, sir.
My question is around when I was looking at all the numbers. So for next 3 quarters, it looks like our EBITDA shall be in the range of around 30% actually, if I try to extrapolate all the numbers. So is my assumption in the right direction, or do you see something else?
So, sir, of course, we already have reported the growth. If you see, last year the company reported 17% margin. This year in the first quarter we already have reported 20% margin. There is already an increase in 3% of the margin. Of course, there will be an improvement, but whatever we have already guided you, we have guided you on the blended level. So we will try to maintain that as of now. And if the things progresses, we are going to update you in the coming quarters.
And second part of my question was around the raw material. Will it be possible for the company to continuously procure the raw material as the capacities are going up now?
Yes, sir. Basically, see, these are coming from the natural forests of India and West Africa. And we have till now, last 20-15 years, we have been doing the same. And we are hopeful that we will be keeping on doing the same. There is no, as such, we don't see any as such big threat in this. And the volumes available for both our products are in millions of tons of sal in India, or shea in Africa, or even mango kernel in India. So we are quite sure unless and until there is a major natural calamity or something.
Okay. So we have the ability to go forward and increase our capacities in longer time horizon, if my understanding is correct, as the market is also pretty big.
Yes, we can do.
Okay. Can you give some kind of guidance over a longer period of time? Revenue growth guidance, is it going to be in the range of 30-40% or something around that?
We cannot share such figures here, but we are very positive and we see a bright future.
Okay. Once again, congratulations to our company and great work which you all have done. Congratulations and wishing you all the best.
Thank you. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, owing to time constraints, this was the last question for today's call. I would now like to hand the conference over to the management for closing comments.
So it was, I once again thank all the participants and Manorama family members for their valuable time for attending the unique Manorama business model and earnings phone call for our first earnings phone call. The company continues to establish itself as a leading and reliable player, committed to meeting the growing demand for sustainable cocoa butter equivalents, specialty fats and butters. And our major thrust on our research and development in place, we remain the preferred partner all over the world for supplying exotic fats and butters to our existing and new customers worldwide in the domestic markets. In case if you have any further queries, kindly write us on email or connect with our investor relations Ernst & Young team consultants. I sincerely once again thank everyone. I wish you a great day and we look forward to seeing you next time. Thank you.
Thank you.
Thank you.
On behalf of Manorama Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.